Hi, I'm Michael Yardney and I'd like to have a bit of a chat today about Australia's population growth, because recently the Australian Bureau of Statistics warned our population growth is slowing. Now, will this slowdown pose a risk to our economy and pull the rug out from under our property markets? Well, there's already a lot of talk about our property markets peaking. People are talking about our economy falling into recession, and some are even still talking about a property bubble bursting. So let's just have a quick look at this topic. So first of all, what do the latest population figures show? According to the Australian Bureau of Statistics, our population grew to 23.7 million people at the end of March this year, up by around 316 people or 1.4% in the last year. Australia's four most populous states accounted for a whopping 93.4% of Australia's population growth over the year. New South Wales increased its population to 7.597 million people, Victoria to 5.9 million people, Queensland to 4.7 million, and Western Australia to close to 2.6 million. Now, I know that sounds like a lot of people coming to our shores, but this was the slowest population growth in almost a decade, with a steep fall in net overseas migration. So some people are asking, why is our population growth slowing? The answer is it's mainly due to migration. The Australian Bureau of Statistics estimates that 173,000 more people migrated to Australia than left it over the year to March. Now that's down about 16% on the year before. However, migration was still the biggest contributor to our population growth. Our natural increase added 142,900 people. In other words, the number of births was more than the number of deaths. Now, has this got anything to do with the mining boom? Some people are wondering, and the answer is yes. The mining boom brought lots of new migrants to Australia, and the figures show the impact that the mining investment slowdown is now having on resources-focused states, Western Australia and Northern Territory in particular. Net overseas migration to Western Australia dropped 71% over the past 2 years, while more people are leaving Western Australia for other states than are moving into it. It's actually the first time that's happened in 10 years. The Northern Territory is faring even worse, with the population growth of only 0.2%, its lowest growth in 11 years. Those leaving Western Australia and Northern Territory were generally moving to Victoria and Queensland, which the Australian Bureau of Statistics said were the only states experiencing a net gain from interstate migration. Now, New South Wales population grew at the national average of 1.4%, thanks to migrants coming from overseas. Well, is slowing population growth a problem? Before we get too worried about it, it should be noted that Australia's population increased by 316,000 people over the past year. I want to remind you, we've still got one of the fastest growing populations amongst advanced economies, and our population growth is well above our long-term averages of 257,000 people per annum over the last 25 odd years, but it's a bit below the more recent averages. So some are then asking, well, what are the economic impacts that the slower population is going to have? Well, the slowdown in population is certainly going to have economic ramifications. Just about every economist, politician and business person is a great believer in a high rate of immigration and a big Australia. But without an equivalent amount of job creation, strong population growth isn't good, since it results in rising unemployment with all its associated problems. So on the positive side, the Reserve Bank has recently observed that it's one of the reasons why the unemployment rates remained in the low 6%, despite our weak economy of just 2% growth over the last year. It's also likely that our dollar will remain low, which could have three significant positive impacts. We're going to have more overseas visitors coming to Australia, as it's going to be cheaper for them. Now, that's good for our economy. Number two, Australians will find overseas travel considerably more expensive, and we're probably going to holiday more domestically. Now, that's also good for our economy. And Chinese investment capital will continue to pour into our shores, underpinning our property markets. You see, at these exchange rates, our properties are cheap for them. However, on the downside, slower population growth equals slower growth in consumption, meaning it's unlikely that we're going to experience the growth of our domestic product by 3% as businesses and households have become accustomed to. To my way of thinking, this means interest rates are going to need to remain low to help stimulate our economy. Only recently, the Australian National ANZ Bank predicted 2 further interest rate cuts early next year, bringing the cash rate down to 1.5%. So what does all this mean for us as property investors? Possibly the biggest impact from population growth undershooting is that Australia's recent housing boom may be building homes for people who are never even going to show up. The latest building approval figures suggest that we're planning to build over 200,000 dwellings per annum over the next year or two. That's one for every 1.6 extra person that's currently coming to Australia, or our population growth. Now, given the average household size is about 2.6 people, what that means is that unless things change, Australia is going to be building more properties, more new homes, more new apartments than it needs to house our growing population. Now, depending upon the supply and demand ratios in individual property markets and segments around Australia, some locations are going to see a surplus of dwellings hit their markets. That's going to put downward pressure on prices of properties in those areas. With this in mind, I'd steer clear of the inner CBD. I'd steer clear of off-the-plan properties. I'd steer clear of house and land package segments in the new areas there. And I'd only invest in the big capital cities because they're where our population growth is holding up. The bottom line is, we're told our new federal government's keen to get our federal budget back into surplus. But if I got it right, slower population growth and slower growth in real gross domestic product is going to make this much harder. At the same time, some sectors of our property market are going to find themselves with surplus properties being built. Now, of course, this happens every property cycle, doesn't it? Times are changing, and while some are going to get caught out, in my mind, strategic property investors are going to adapt and take advantage of our changing population and the changing demographic trends. What this means is you're going to buy the sort of property, strategic investors are going to buy the sort of property that'll be in strong demand in areas where population growth is still strong and where people are going to have jobs and the ability to buy properties and the desire to buy properties. If you want to understand where these locations are and how to best take advantage of the opportunities ahead, and just as importantly, avoid the traps that are ahead, why not have an independent chat with the independent team at Metropole? We've got offices in Sydney, Brisbane and Melbourne, and we'd love to have a chat with you. If you're a beginner, we'll help you get started in property. If you're an experienced investor, we'd love to review your portfolio and see if we can make some suggestions and help you move to the next level.